been a while since I have done a video, so I figure right now would be best time to do that. So I want to do a little bit of a longer term view. Of course, we know that we're in a little bit of some choppy waters right now. So I'm going to start with the normal. It's not financial advice. I'm not your financial advisor, and you're responsible for your own trades. I'm just here to give my opinion on everything, and you can take that with a grain of salt and consult with everybody else out there that's got their own opinions on things. So what I'd like to do here is, first things first, I want to take a look at our retracement from the bottom all the way down here at 31, 21, and then all the way up here to the top, which, as we know, was about 18,900 or so. They're pretty close. So a couple things that I have noticed that we've seen here. Of course, we know that our first bounce was down here at 38.2 percent retrace. This was a long time ago. This was way back in early July, and so with that, we had a good bounce. Then we came down. We broke below that. We did happen to find a little bit of support there. We found support here again, and then again, and then finally, after we tested it one last time, we had a good rally that took us up to about 10,400 and so. My opinion, that was sort of a stop hunt, and then we just completely rolled over. Now, where we're at right now is really quite interesting. So let's take a look at where we're at now according to this Fibonacci retracement. So we are in a little bit of a consolidation cluster right here without a whole bunch of volume to take us up. There are our major volume candle that we had on the 24th of September that broke us through our support was significant volume. And to be quite honest, the volume that we're seeing right now is sort of tapering off, and it's not really something that we want to see, because if we don't have volume coming into the market, well, then what's going to end up happening is we are going to continue to go down further. And I actually think that's what's likely going to happen. I do think that there is potential for us to move up a little bit, maybe up here to 9,000, maybe 8,800 is it, before we do finally roll over. And then we're going to be looking in this zone right here, which is going to be somewhere between 7,000 and 7,250. So we can see here, that's going to be our golden zone. That's what we're going to be looking for. And in my opinion, this is going to be finally the completion of a wave two of a massive impulse. So we started all the way down here, and then we started to move up. So this would be a 1. And then this could be a 2 down here. I say could be because we still have to wait and see what happens. But then, of course, the 3, 4, and 5 would be up a little bit higher than that, of course, in a much higher degree. This would be probably on some sort of a cycle count. So this is a major count, and we are completing a correction here. And of course, this correction, if you like Elliott waves, likely this is going to be a W, and then an X, and then we're completing this Y down here. And as far as the market geometry goes, I think this does match up pretty nice. The area that we're consolidating right here is pretty important because there's a large cluster, as we know, in this same zone right over here where we consolidated for quite a long time. There was a lot of accumulation happening in this area, and of course, lots of distribution that was happening up here. And by distribution, you can tell it's distribution because you have a high, and then you have a lower high, and then you have a lower high, and then you have a lower high, and then you have your last resort before the sell-off. So in each one of these previous highs that are creating that descending wedge that we were seeing, that is an area of distribution. Finally got to the point where people were satisfied with what they had sold, or at least a group of people were satisfied with what they had sold, and then they finally made it break the support that we had. Of course, as we know, and we have talked about previously, this support right here, which we have looked at extensively over the last several weeks as it was developing, the support A lot of people were holding out hope that this was going to be a symmetrical wedge. Fact of the matter is, it really wasn't. If you take a look at it, it does not look like a symmetrical wedge at all. If this was a symmetrical wedge, it would look something a little more like this. It would come out like this, and then this would also come up a bit more to create a little more symmetry, hence the term symmetrical wedge. So we didn't have that. We had a descending wedge and we broke through it. And that doesn't mean it's the end of the world because, again, going back to, the other fact of the matter is we were in this same pattern for all of 2018. It is said inside of our Discord server that this current pattern does look a bit like a fractal from 2018. We were creating very similar pattern where we had our high, and then we had a lower high, and a lower high, a lower high, and this was our last resort before moving sideways, and then finally rolling over. But key here, if I move to say a 3-day chart and take a look at this from a higher perspective, or a higher time frame perspective, this looks very similar. This does look very similar, and I know I'm not the first person to say this, but it is something that I do have to pay attention to. What we are seeing right now in the range that we are currently in, let me just point this out, moving in here, it is taking a little bit longer, but this zone that we're currently in right here does look a little bit like either this zone or maybe more along the lines of this zone down here. This is looking a little more like it because this only took a couple days. This maybe took a week to occur, and we've been down here already for 3, 6, at least a week, maybe a little bit more that we've been inside of that zone, and that sort of falls in the line of this right here. And also, just to point this out, if we're taking a look at this from a perspective of down here, what we're going to be looking for is let me remove this and get out my drawing tool. We're going to be looking for this move to come down, and then we're going to consolidate, and then we're going to create another low, but it should be a higher low, and then finally we're going to try and break back up into this. If I were to put this into this area right here, again, I'm going to be looking for a move up and a move down to this zone, and I'm going to see a look up to this same area that we're in, and then a rejection, but I don't want it to come down as low. I want this to create our first 1, 2 that's going to get us up to our higher targets. Now, is that going to happen? That remains to be seen. There's a whole lot of time and a whole lot of things that can happen. And just because it happened in 2018, 2019 doesn't mean that this is what's going to happen in the last half of 2019. Doesn't mean we're going to create the same outcome. I do think that there is a high probability that we come down here to this golden zone and we bounce out of here. I think that's a good high probability trade to take down here at especially a 72.50. Looking at the cluster that we have in this area, there should be a significant amount of support in this area right here, because if you recall back on early May, we had a capitulation candle that got bought up really fast, and it's sitting right at that same area, right at about 72.50, right where that 618 is, and we would be going right back down into that area, and then we want to bounce out of it pretty aggressively, similar to down here how we went down and then we bounced out of it pretty aggressively. And of course, when I say aggressively, this took approximately a week to happen, so we shouldn't expect things to happen overnight. We do want to be patient with everything, how it occurs over time. But nonetheless, I'm going to be looking for a bounce here and then to start another impulse to go up. If we fall through this zone, so again, buying down here, you've got a decent risk reward. So even if you take this halfway down into the 618 area, which I do expect a little bit of overextension, you're going to want to control and manage risk somewhere beyond the 6.5. I wouldn't put it right at the 6.5 because, again, there is a potential for some overextension. But this is, and I'm not going to call this a generational trade or say anything stupid like that, but there is a good potential for there to be some decent gains from this. And again, it will take time. This is not something that's going to happen very fast. It could happen fast, but nonetheless, you're looking at about a 5% loss if you stop at about 6,700, which that's where I put my stop at 6,700. So 5% loss for, even if you pulled this down, you were conservative and you took us back up here to the 382, that's still a 38% gain if you pulled that up to 97.71. Even if you took it to 9,000, you're still looking at a 27% gain for a potential 5% loss. So that's not bad. That's 5 to 1 odds. And, if you consider investing, gambling, 5 to 1 odds, that's not bad, right? So again, you're looking for this to have a decent trade setup. And again, if you're gonna allow yourself to have the patience to wait for this trade to happen, I do believe that there is potential for you to be rewarded. If you want to take the short route, I would not short here at this area at 83.35 where we are currently at. I would wait for another bounce up to potentially 8,800. And the reason why I say 8,800, and again, you're going to want to manage risk at about 9,000, even though 9,000, maybe a little bit beyond that. Give yourself 2 or 3% to bring yourself all the way down here to this zone. So again, you're looking at 7 to 1 odds. You're risking 3% for potential 22% gain if you allow this trade to occur, where again, you're going to be waiting for this to happen, for it to come up here and hit your sell target, and then to finally roll over, come down. Again, it'll take time before it finally does come up here and start to create a little bit of an impulse to get ourselves out of here. And we are going to be waiting for a decent reaction off the 618. I expect there to be a reaction at a minimum. Maybe this isn't the case where we are going to pull ourselves all the way up here out of the weeds and back up into, our high target zones. But I do think that it is an area that will have major support, and there will be buy orders waiting down here. And so I would just say expect it, and be ready for it, and don't be afraid to buy. If you're afraid to buy, then you're not going to make any money. So that's what I've got to say about that. As far as waiting for the 8,800, let me go ahead and clear this chart, and I'm going to drill down to a 30-minute time frame, just to kind of show you why I'm saying that 8,800 is a potential target for this. All right, so maybe I should move to an hour time frame. 30 minutes might be drilling in just a little too far. Okay, so if we take this high, this swing high right here, which, the interesting thing about this is an obvious 1, 2, 3, 4, 5. This is an impulse that just completely failed. But nonetheless, if I take Fibonacci and I go from up here at the top and I work my way down here to the bottom, again, the bottom sitting down here, and it just happened a couple days ago at 76.91. I was talking 8,800. That brings us up to the 38.2. This is at 87.50. So it is possible for us again to overextend. 87.50, that's where I'd be setting ourselves up for the short. That would be completing a wave 4, again, in my opinion, and bringing us down to the 5, which again, that's at 7,000. So more confluence at the 7,000 level. That's going to be our high probability target for a wave 5 once we get the rejection off the 382. So again, just to kind of put this into perspective again, you're going to want to, enter somewhere around this 382. Maybe it's at 87.50. Maybe you want to wait a little bit more. Again, we were talking about a 3%, a 3% stop. Maybe it'll go up to the 50%. That remains to be seen. But then pulling ourselves down to this high probability target down here, that's a 20% gain on a short, right? So again, that's 6 to 1 odds. So slightly different trade setup, but you're going to be looking in that area for that. Okay, so where would we then go if we were able to get that bounce off that 618? What's our next target? So we have another tool that we're going to use for this. This is going to be our trend-based fib extension, which I love to use. If this is an impulse, we're going to be looking for a 618 extension off of this trend, and say we're going to come all the way back down here. Let's project this off of 7,000. Okay, or maybe we'll just project it right off the 618, which is right around 72.50. So project this off of 72.50 or so. Our target for a 3. Now this is an enormous wave 1, so it's really hard for me to tell you that we're going to go to this target, but if this is going to be an A, a B, and now we're going in for a C, well, then our target actually would be right up here, creating a double top at 13,900. If we break through that, an ABC would allow us to come up to 18,000. An ABC would still allow us to come up here to actually create a new high. So at about 20,650. But if this is an impulse, and this is why this seems so far-fetched to me, to say that we are going to go to 25,000, or in this case about 24,750, that is, in my opinion, that's pie in the sky. I'm not going to sit here and tell you that this is something that you should buy and wait for. I don't think this is going to happen anytime this year. If it does happen, it's going to happen over the course of about 18 months. It's going to take a lot of time for that to occur. And if you're in a long position, likely funding is going to eat away at your margin. And I wouldn't suggest buying and just holding that long, even though the gain is significant. But I do think that we are in the middle of creating a sort of an impulse down here to get to this area. Then we'll be bouncing off of there. First place that I would be looking for, of course, extremely high resistance, is going to be sitting right here at this 618, which is a valid, that's going to be a valid ABC. And when I say ABC, what I mean by that is from down here, starting at 3121, we're going to be looking at this as a bigger A, and then coming down here for the B, and then we're now creating the C. And maybe this is going to be just a flat, to be just an A, a B, a C, and then at that point we would just completely roll over. That's possible. It still is to be determined what this is going to turn out to be. This reaction off of the 618 down here, again, at about 72.50 or so, that's going to be a big indication as to what's going to be coming next. We need to see a good reaction off of that. There was a lot of accumulation down here. There was a lot of distribution up here. And you could tell that this was distribution, just like the distribution in 2018 was. Lots of high volume candles, and a lot of them turned out red. We had this extremely high volume candle, which was our blow off top, that basically took us all the way up here to this area, then started our deflation cycle to compress us into this zone where we collapsed, and now we're chopping. And I do expect us to come down here to hit this zone. There's a lot of buy orders at 7,500. I talked about this on the Discord a little bit ago. Actually, it's been a couple days. There was so much buy pressure at 7,500. It was reasonable for us to bounce off of that. So going to a 3-hour time frame and zooming in just a little bit here, we didn't get to 7,500. That's very obvious. We had a front run off of that, a good reaction off of that. I would really like for us to continue to see this and then to roll up here to the 8,800 to 9,000 before you start to look at taking that short down to 7,200. Again, not investment advice. It's just my opinion on how things are eventually going to play out. So yeah, that's about all that I've got for right now. Again, if you do have any questions or anything, feel free to pop in the Discord. I'll do my best to answer any questions that you have. A lot of what we're in right now is just a lot of chop. It's really easy to get yourself caught in positions, so just be very careful. Do not use high leverage in this zone. Again, this isn't advice, but what I would say is to just be cautious. Start with low leverage. Maybe even if you're using cross, only put yourself in at maybe half of your capital, not using any leverage at all. So 0.5x, 1x. Just do a natural buy in that area, or if you're shorting, do that as a sell. Don't be greedy, and don't get caught in liquidation hunts, because that's of course the last thing that we want to see. So again, if you have any questions, pop in the Discord. If you have any desire to join the Discord, it doesn't cost anything. Feel free to ask me for an invite. I'll be more than happy to get you an invite to it. So I guess at that point, I'll let you all go. If you have any questions, pop in there. Otherwise, I'll catch you all later.